Your home can be a money-making machine. So stay tuned to the end because I'm going to show you a simple trick to save over $100,000 on your mortgage. So welcome. So one of the biggest benefits of owning a home is your home can be a money-making machine. And that's what I want to show you right now. Really, if you are renting at this very moment, there's really no benefit financially for you to be renting unless your rent payment is way, way below the market value. There just isn't a benefit. There are a lot of benefits that you will get in purchasing a home. Listen, you're going to pay a mortgage, whether it's your mortgage or your landlord's mortgage, you're still paying a mortgage. So you want to make sure that you are paying yourself. And that's how you can gain wealth in real estate, is by paying yourself. So let's go over a couple of things. One, I know on this chart that you've seen so many people posting that, this is the rates have gone up, but the rates are still lower or on average of what they are. But none of that really matters. I want you to really focus on the fact that you have to live somewhere and you have to pay a mortgage. Again, either your mortgage or your landlord's. Look at ways that you can purchase a home. That may mean that you need to set up a budget, and I can put a link below on how you can do that. But start saving money, and listen, tax season is coming up. You're going to be filing your taxes, and a lot of people out there are going to get a tax refund, and that can go towards paying for the down payment on your mortgage. This is the perfect time for you to be out there looking at real estate to buy. I understand prices are higher. I understand that interest rates are higher. But listen, if you have been locked out of getting a home over the last couple of years because there's so many cash buyers, that is changing. So you can go out there and you can negotiate far more than you were able to do 2 years ago. You can start negotiating for the seller to pay discount points, the seller to pay some or all of your closing costs, the seller to reduce their sales price on a home. There are just a lot of avenues that you can take advantage of right now to get into a home and start building wealth. Let's look at some facts on purchasing a home right now. Okay, so we looked at the benefits of why you should buy over rent. Now let's look at some numbers here to really show you the difference between renting and buying. I've used averages here. So I base this off of a $350,000 purchase price with a 3% down payment, which on a conventional loan, if you are a first-time home buyer, you only need 3% down to purchase a home. If you need an FHA loan because maybe your credit isn't quite as strong, then you're going to need 3.5% down for the conventional loan. And then, there's VA loans with no money down. So there are different options, especially as a first-time home buyer, to get into a home with a low money down payment. So your rent may be higher or lower than what I have here, but this is just to give you an example of what you're looking at. So a rent payment of $3,000 a month is going to cost you $36,000 a year just to rent a home. And there's really no benefit for you financially in doing that. You're not building equity. You're going to pay somebody's mortgage. Either you're paying your landlord's mortgage or you're going to pay your mortgage. If you're paying a landlord, every year his taxes are going to go up and his insurance is going to go up. So your rent is obviously going to go up every year, and your landlord still wants to make money. So he's going to increase your rent even more to offset those higher costs. So remember, this is everything that I'm talking about is based off of you have to live somewhere and you have to pay a mortgage, either yours or your landlord's. So $36,000 is going towards your landlord's mortgage. So now let's look at this scenario that you're purchasing a home and your mortgage payment is going to be that same $3,000 a month. So let's look at the benefits to you as a homeowner. Again, over 12 months, you're still paying $36,000 towards that mortgage. Now, what a lot of people don't understand is when you make a mortgage payment, you pay part of that is going towards interest, but some of that goes towards principal. And principal is really your money. I'm loaning you $350,000, and part of that money is really just your money going from one account to another account. So look at it like this. If you have $5 in your pocket, that's your $5. If you take that $5 and move it to your other pocket, it's still your $5. It's just going to a different location. So let's look at this $3,000 a month. You're still paying that $36,000 a year towards that mortgage, which you're going to pay anyways. But $3,500 of that is going towards the principal of that loan that I've given you. So that's your money. That $3,500 is your money. That's just going from one account to another. Now, yes, that money isn't available to you to spend, but you have to look at it as I'm putting money aside for an investment, to me being able to live in a home without a mortgage. So again, $3,500 a year for the first year. Now that's going to go up every year because every year as you make payments, you're paying less in interest and you're paying more towards your principal. So that's going to go up every single year. Now, the other thing that happens with real estate on average is that you're going to get appreciation. Your home typically will go up 3% every year in value. Now, some people are going to say, hey, Mike, I remember the crash and property values dropped. That is true. They did drop, some of them drastically. But over time, even though they dropped then, they still have gone up in value. So that 3% is just average. If you look at across the country over the last couple of years, property values have increased anywhere between 20 and 50%, depending on where you are in the country. So let's look at that as just an average of 3%. Over the first year, the actual cost on that mortgage is only $22,000 a year because you've been basically putting money aside into a future savings account and you've been building that appreciation. That is the power of real estate and how you can make money over time. Now, you want that property value to keep appreciating. So we're looking at long-term goals. Now, in the next part of this video, I'm going to show you how you can turn your home into a money-making machine and how you can save over $100,000 in interest on your mortgage. So stay tuned for that. It's very important. It's a small, easy trick to do, but it's going to save you hundreds of thousands of dollars. Okay, here we go. Now, this is where you can really, really use your home as a benefit and how you can save literally hundreds of thousands of dollars. So in our example that we were looking at, rent versus buy. So now you bought your home. Now you're making money. Okay, your monthly expenses for your mortgage are going to be less. You do need to keep up your home. So listen, your home is going to appreciate in value as long as you take care of it. This is a big investment, so obviously you want to make sure that you're taking care of it. You want to do the monthly maintenance, whatever it may be, on your air conditioner, on your water heater, change filters, all of that kind of stuff that you would normally do on a vehicle. You want to make sure that you are taking care of this investment. So let's look at this. So we did a $350,000 purchase. Yours may be higher or lower, like we talked about before, with a 3% down payment with the going rate of 7%. Now, again, your mortgage rates change 2 to 3 times a day, sometimes more, sometimes less. But we're just kind of giving you an example of what the going rate is. Keep in mind, if rates were to, let's say you do buy a home, it's at 7%. I understand that in today's time, with the way things have been over the last couple of years, that seems like a really high interest rate. But again, you're going to date the rate, marry the home. So if rates go down and you're able, you're going to want to refinance to get a lower interest rate. That just makes sense. But in doing that, that really accelerates this money-making opportunity for you. Loan amount of $339,500. The interest rate, 7%. your mortgage payment, just the principal and interest payment, is going to be $22.58. So like we were talking about before, as you make that $22.58 each month, some of that's going to go to interest, some of that's going to go to principal. And you can see on this table that the majority of what you're paying when you first get a mortgage is going to go towards the interest on a loan. Okay. But each month, you're going to put a little bit more, a little bit more, and a little bit more to put it against the principal of the loan, like we were talking about in the example. Now, in the example, what I did is looked at, let's say you just make an extra $100 a month towards your principal payment. And you can see by this chart, after a year, you're getting about $4,600 extra in your principal payment. But look at this. You're going to save just by $100 a month. And everybody can look at their budget and probably save $100 a month. That means maybe going out 2 times less out to dinner. That saves you, over the life of the loan, $70,000. Now, let's say you just make $200 a month extra onto that principal payment. After a year, you're going to have built up $5,900 in extra payments. But look at the interest you're saving, $121,000 over the life of the loan in interest. Now, the next thing that you're going to say is, hey, Mike, I'm not going to live in this home for 30 years. I'm not going to be paying on the mortgage for 30 years, so that doesn't apply. Okay, that's fine. So let's look at this example. Are you currently saving money towards investments? Are you putting any money aside for your future? So let's take that same, let's say that you're making 4% so let's say you have that $200 you're not going to pay towards your mortgage. You don't want to do that. But how about let's put $200 a month into a savings account that yields 4%. And that is going to be, probably high for a savings account, but there are other investment vehicles that you could put in. So after a year, again, you're going to make those 12 installments. You have over $2,400 in your savings account. So let's say you keep doing that and you continue to do that for 30 years, just $200. Now, I know a lot of people, because I look at their credit reports, their car payments are $400, $500, $600, $700 a month that they're spending on a car that's going down in value. So if you were to put that $200 into a savings account each month consistently, at the end of 30 years, you have $138,000 in an investment. That's incredible off of $200 a month and at 4%. Well, let's say you put that money into the stock market and you get an average return on your stocks of 8%. Now let's look at that. Over a 30-year span of time, if you're consistent in doing that, you have almost $300,000 in an investment. So what am I just telling you here is save money. There are ways that you can use your home as a vehicle to save money. There are things that you can do as personal investments to save money. If we go into a recession, this is a great opportunity to cut down on expenses and look at ways that you can invest that money to make more money. Your house is an opportunity to make an investment and make money off of that home. It's a big difference in renting and buying. If you plan on being in any area for a couple of years, it may very well be a great opportunity for you to purchase. And again, there are more homes on the market right now. So there's more opportunity for you to find the right home that you want to be in for maybe 5 years or 10 years. And all of these principles will apply to that home. So if you have any questions, please feel free to reach out to me. I am here as a resource for you. This is a way to build your personal wealth through real estate. Have a great day. So listen, I hope you enjoyed going over those finances and how your house can actually help you to build wealth and help you to make money. So I know this isn't a flashy way to make money, but time is on your side if you do this. If you have to be consistent, and either consistently paying towards the principal of your mortgage or consistently investing every single month. If you do that over time, and again, it's going to take time, over time, you will build generational wealth that way. Again, either through real estate with your primary residence or investment properties, or investing in stocks or silver or gold or something. It's not as flashy as hitting it big in cryptocurrency or picking the right stock or anything. But over time, you're going to find that this is going to really make you money. So be consistent in this, whether, again, it's paying down your mortgage or investing that money. But I promise you over time, and you'll contact me in 20 years saying that it changed your life. Have a great day.